Hi, Ken St. Onge from Insurance Journal Magazine here. I'm sitting with Michael Karmilowicz. He's Vice President of the Hartford Financial Products. Today we're going to talk a little bit about D&O pricing and how the market's affecting D&O insurance. I wanted to begin today by talking about D&O pricing and the economy. One of the things that we hear a lot about is that this economic crisis is different than crises in the past. I'm curious if you think that's the case.
The state of the economy is not good. Obviously, there's a tremendous downturn in the economy. Not only is it domestic, but it's also global. The breadth and the scope of this recession is severe. It's having a tremendous impact on the banking system, and more importantly, it's starting to impact the commercial companies as well.
How is the economic climate affecting D&O pricing?
The pricing varies across different segments of business. For example, in the financial services business, we're seeing significant price increases as the financial service business is more impacted initially. A lot of this has spilled over into the commercial arena, and we're seeing now a lot more activity around commercial companies, especially those companies that are leveraged.
How can public companies help themselves in the D&O underwriting process?
Companies that are public can help themselves in several ways. Better disclosure or transparency with the underwriters can help give a better idea of what they're up against, especially in this difficult economic environment. A lot of times companies aren't willing to give information because they're more concerned about giving information that may be false or misleading. In a volatile market like this, we're just trying to get the best information to make the most informed decisions around their underwriting.
How can private companies help themselves in the D&O underwriting process?
Private companies can help themselves in the D&O underwriting process by giving more updated and relevant information. Oftentimes, the information that's provided, especially on the financial strength of a company, is usually outdated by months, even years.
Underwriters talk a lot about transparency. Do you feel that you're getting the information you need to quote prices accurately?
I think transparency is a problem. It's even becoming a bigger problem as this market becomes more challenging. In light of the severe downturn and the economic crisis we're dealing with, companies are more hesitant or reluctant to give information because they're giving false expectations. Unfortunately for underwriters, we are put in a position where what information we don't receive, we will assume the worst and unfortunately price it with those expectations.
Tell me a little bit about Side A coverage in a D&O policy. What is it and what does it cover?
Side A policy is your last line of defense for directors and officers on an individual basis. It's usually triggered by the inability of a company to indemnify the individual or insolvency of the company.
How will Side A claims affect pricing for D&O insurers?
Side A claims will affect D&O insurers in a couple ways. One, companies are not accustomed to paying Side A claims on a historical basis. There hasn't been a lot of claims activity for Side A. And two, there's an inverse relationship to the price and the risk of the product. There's a lot, with bankruptcies looming over the next couple years, these products will be more front and center.
What are the key metrics that D&O underwriters look at in a company?
Some of the key metrics that go into the underwriting process can vary depending on the company, whether it's private or public, the size of the company. But effectively, we look at company stock price performance over the last couple years, how much debt the company carries, its financial strength, corporate governance, executive pay, and it can vary by company as far as industry issues or specific company issues.
If a company has taken government bailout funds, how does that affect the way a D&O insurer might look at the company?
If a company takes out government bailout money, it can affect the company in many ways. It certainly will make the underwriter scrutinize more around the company's financial condition. But at this point, it's very early to tell what ultimately that means, especially in these challenging times.